we will look at the scenario 3 now, which is worth of a 20. First part is worth of 20 marks, and it's saying what it's saying. Using the information in Exhibit 1, comment on the matters to be considered. Okay, and explain the audit evidence you would expect to find during your review of the audit working papers, okay, on 1st July 2005 in relation to the issues identified. And the marks allocation is provided as guidance for this question. Firstly, we will have railway operation license and going concern scenario, which will help us to get 7 marks. Right, so straight away, Maddie Company is a listed transport company which provides train and bus services for the public on a national basis. The audit of Maddie Company for the year end 31st March X5 is nearly complete, and you are reviewing the audit working papers. Maddie Company is a new audit client for Bath and Co. This year, the previous auditors issued an unmodified opinion on the financial statement for the year ended 31st March X4. Maddie Company draft financial statement recognized revenue of 61 million, 2004 X4 94.3 million, profit before tax of 10.5 million, 2000 X4 22.1 million, and total assets of 28.4 million, 2000 X4 31.3 million. So as you see, draft financial statement recognized for this year, revenue is 60.1 million. Last year it was 94.3 million. PBT this year 10.5 million. Last year it was 22.1 million. Total assets this year 28.4 million, and last year it was 31.1 million. Okay. So the audit supervisor brought the following matters to your attention. Matty Company has operated a national railway service for the last 19 years. Matty Company national railway operations have been the subject of adverse publicity over the last 12 months in relation to the unreliability of its services, including the late running of its trains. Okay, okay. So operating license and going concern is the issue over here, right? The license to operate the national railway is put to tender by the national government every 5 years. MATI company's existing license is due for renewal on 28th Feb 2006. That means within a year. Okay, within few months. Okay, the current tendering process is approaching completion, and despite the recent operational problems, MATI company was informed on 30th June exercise that the company was the government's preferred option. This was on the understanding that the company would address the recent criticism of its poor service levels. The company was also informed that the tender would still be subject to a detailed review in 1 month's time prior to its being awarded. The National Railway generated 40.2 million of the revenue in X5, 47.2 million in X4, and contributed pre-tax of 11.2 million this year. And last year it was 13.3 million in 2000 X4. Well, what I will do for this, I will go to my word sheet over here, and and all right now, we'll be discussing the requirement scenario 3 from the March June 21 exams. And here is the requirement one. Using the information in Exhibit 1, comment on the matters to be considered and explain the audit evidence you would expect to find during your review of the audit working papers on 1st July 2005 in relation to these issues identified. The following mark allocation is provided as guidance for this question. First scenario, first one, uh, railway operating license and going concern, 7 marks. So, MATI company is a listed transport company which provides train and bus services for the public on a national basis. The audit of MATI company for the year ended 31st March 5 is nearly complete, and you are reviewing the audit working papers. MATI company is a new audit client for the base and co. This year, the previous auditors issued an unmodified opinion on the financial statement for the year ended 31st March 4. MATI company draft financial statement recognized revenue of 60.1 million. 2004, 94.3 million. Profit before tax, 10.5 million. 2004, 22.1 million. And total assets of 20.4 million. 2004, 31.1 million. The audit supervisor has brought the following matters to your attention. Railway operating license and going concern. MATI company has operated a national railway service for the last 19 years. MATI company national railway operations have been the subject of adverse publicity over the last 12 months in relation to the unreality of its service, including the late running of its trains. Okay, so the license to operate the national railway is is put out to tender by the national government every 5 years. MATI company's existing license is due for renewal on 28 Feb 6. The current tendering process is approaching completion, and despite the recent operational problems, MATI company was informed on 30th June X5 that the company was the government's preferred option. This was on the understanding that the company would address the recent criticisms of its poor service level. The company was also informed that the tender would still be subject to a detailed review in 1 month's uh, time prior to its being awarded. The National Railway generated 40.2 million of revenue in X5, 47.2 million in X4, and contributed pre-tax profit of 11.2 million this year, 13.3 million in X4. Okay, so now we will draft our answer on this part of the question. So what we'll say simply, firstly, it's our question number 3, matters and evidence. Number 1, license. Number 1 scenario is railway operating license. And the matters are uncertainties in relation to going concern. Okay, is my heading. IS1 presentation of financial statement requires management to disclose material uncertainties in relation to going concern and ISA 550, sorry, 570 revised. That is going concern requires auditors to assess the adequacy of this disclosure. Therefore, the principal matter raised by the unresolved status of the license tender is the potential impact on MATI companies' financial performance and financial position if the company is unsuccessful in the tender process. This in turn creates uncertainties in relation to the going concern status of the license is due for renewal on 28th Feb 2006, which is 11 months from the reporting date, and therefore within the foreseeable future for the purpose of the going concern review. Although the company has been informed that it is the preferred bidder, there are still significant doubts as to whether the license will be renewed given the government requirement that the company addresses the recent criticism and the pending review in 1 month time. Right. So so far we have covered 3 marks, 1.1, 1 point, 1 point and a half, 1.5 marks. are available for one uh, valid discussion into the matter. So we have covered so far 3 marks, right? Okay, the revenue generated from the national railway license represents 66.9% MATI company's revenue for the year and is highly material to the company statement of profit or loss for the year and critical to its operations. It is also significant that the national highway railway license contributed profit before tax of 11.2 million, which is 106.7% of this year profit. Without this contribution to the company, the profit, to the company, the company is loss making. So that's it. That's enough for the matters part. Now we will write the evidences, and for evidences, remember we will get 1 mark per evidence. So what I'll say, a review and analysis of budgets and cash flow forecast by the auditor in order to assess the ability of the company to survive as a going concern for the foreseeable future. Two, although 4.5 marks are covered, we need maximum 3 evidence for it, but we will do more, one extra, right? Okay, a review of the any correspondence. Files between MATI company and the government transport department in order to identify any developments in the license renewal process and consider their impact on the likely renewal of license. Number three, A review of the company board minutes. For evidence of management, discussion of the status of the tender process and of any contingency plans. A review of the press reports in relation to the later running of Meti company's trains and the quality of its service to assess the seriousness and significance of the issue. Four evidences then for this part of the scenario. Now we will move to the next part, right? And what's the next part saying? Purchase customer list. How much marks available on it? Let's look at it. 8 marks. So on 1st April 2000, Exomatic company paid 6.9 million to acquire the customer list of Jazz coaches, a business which was terminating its operation. Jazz coaches hires out coaches and drivers to private and public sector customers. Its customers list includes many highly reputable listed companies and government bodies with a customer relationship and trading history going back more than 30 years. On the basis of this trading history and the associated customer loyalty, the management of Matty company assess the useful life of the customer list as indefinite. The draft statement of financial position as the 31st March X5 recognize the customer list as an intangible asset at a total carrying amount of 6.9 million. Okay. In the second half of the reporting period, however, two of the Jazz coach's largest clients moved to new competitor. The management of the Matty company believed that while it would be difficult to identify sales value for the customer list at the reporting date, they estimate the value in use of the customer list to be 7.2 million. Right. So just again reviewing 8 marks available over here and plenty of issues identified. Let's dive in and start drafting the answer for this part. So purchase customer list matters assessment of useful life. The carrying amount of the customer list purchased from Jazz coaches is highly material to Matty company draft statement of financial position at 24.3% of total assets. According to IS 38, Intangible assets, a reporting entity should recognize intangible assets initially at cost and should assess whether an intangible asset has its useful life is finite or indefinite. An assessment of a useful life as indefinite is only appropriate if on an anal- on an if on an analysis of all of the relevant factors. There is no foreseeable limit to the period over which the intangible is expected to generate net cash inflows for the entity. This assessment requires a significant level of judgment to be exercised, and the subjectivity of the carrying amount creates a high level of risk for the auditor. In this case, the trading history of jazz coaches prior to its acquisition by Matty Company may provide some evidence that there is no foreseeable limit to the period over which the purchased customer list can be expected to generate cash flows. However, this assessment needs to be assessed carefully by the auditor. Intangible assets with an indefinite life should not be amortized according to IS 30. Okay, now we have another issue over here that is related to impairment review, which which matter need to be discussed. So impairment. IS 38 also requires a reporting entity to test intangible assets with an indefinite useful life annually for impairment. This impairment review would involve a comparison of the carrying amount of the customer list to its recoverable amount, which, given the difficulty in identifying a sales value for the customer list, is likely to be based on an assessment of its value in use. The assessment of value in use is a highly subjective exercise which involves an estimate of the future cash flows the entity expects to derive from the customer list, expectations about possible variations in the amount or timing of this future cash flows, and the time value of money represented by the current market risk. Market risk-free rate of interest, management assessment of value in use as $7.2 million appears to be very close to the assets carrying amount of $6.9 million, and it is possible that management may have manipulated its assumption to avoid the recognition of an impairment loss. The auditor, therefore, need to carefully review and consider management's assessment of value in use and assumptions implicit in calculation. Now, overall, we get 5 marks for this. Now, again, we require maximum three evidences, but we will try more than that. Okay. So, firstly, a copy of the purchase agreement to identify the details of the acquisition, including the purchase consideration, the assets acquired, and the date of the acquisition, agreed to the detail included in the accounting records. Agreement of the purchase consideration of $6.9 billion to the company's cash book and bank statement to confirm purchase price. Two done. Third one, copy of the client schedule copy of the client's schedule calculating the value in use, of the purchase customer list as $7.2 million and confirmation of the schedule mathematical accuracy. Last one. A discussion with management in relation to the basis of calculation of value in use and an assessment by the auditor of the reasonableness of management's assumptions. Right, cool then. That's how you need to do it. First, you need to tell what you need in the tangible form, the reason for it, and why you need it. That's what I embedded in this evidences so far. I hope you're getting it. And finally, let's move to the last part, which saying Medi Company draft annual report includes a performance review written by the company's chairman, from which the following extract has been taken. It is always a pleasure for me to associate with such a stable and high performing company as Medi Company. During my tenure as a chairman over the last 5 years, the company's business has grown each year and has produced an ever improving return for our investors. The audit working papers include notes of a discussion with the company's finance director, in which the comments the chairman's performance review and maintains that everyone understand that it is the chairman's role to the promote the company with a positive narrative. Oh, overall, totally distracting. I mean, opposite statements by the chairman. As you can see, the company is going in loss since the time, since been a while, right? So now we will draft the answer on this part. Okay, last part drafting now, chairman's statement. Firstly, the matters. Duty to review other information according to ISA 720. The auditors responsibilities relating to other information. The auditor has a duty to review other information which has been included in the annual report and determine whether the other information contains any material inconsistencies with the financial statements. In this case, the performance review included in the chairman statement does appear to contain some significant inconsistencies. First, the chairman description of Matty Company as a stable and high performing uh, company seems inconsistent with the going concern uncertainties which exist around the national railway license. Furthermore, the statement that Matty Company's business has always grown each year and has produced an ever improving return for our investors. seems inconsistent with a 36.3% fall in revenue. Secondly, the finance director comment that everyone understands that it is the chairman role to promote the company with a positive and upbeat narrative is inappropriate. The chairman statement should be accurate and objective, and the finance director attitude that it is the chairman role to promote the company regardless of the accuracy of the narrative in his statement creates doubts in relation to management integrity. Now, we covered the three marks already in the matter, so only two evidences will be enough. What will say a detailed review of all the other information contained in the annual report to identify any other possible inconsistencies and investigation of such issues. One and the last, notes of discussion with management explaining the apparent inconsistencies between the chairman's statement and the financial statements, requesting amendments to the chairman performance review and documenting the client's response. That's it for this part of the question. I hope you get it. How to draft the scenarios answer. See you next time in the next question.